Okay, thank you. So our next speaker here is Congressman Gottheimer out of New Jersey. And our moderator is going to be Mike Masone. We're going to skip the intros and we're going to go right into the conversation here, given that the Congressman is under a short deadline here. So Congressman, thank you for joining us. Mike, I'm going to turn over to you.
Thank you so much. Sorry about that. How are you?
Very well. Thank you, Congressman, for your time. We appreciate it. Knowing that you're under a tight time restriction, let's delve right into
We're negotiating debt ceiling here, man. We're trying to actually make sure we don't drive off a fiscal cliff in this country.
Well, thank you for that. And thank you for your service. We appreciate it. Let's focus. I'll focus on two primary issues, which I think at the oversight hearing with Chairman Gensler, you were keenly focused on. So digital assets being the first, and we'll pick up on some of the themes that Jim had spoken with Representative Huizenga about. I know that you're on the Digital Assets, Financial Technology and Inclusion Subcommittee. In the aftermath of FTX and the failure of some of the crypto banks, Silvergate, Signature, at a high level, where does this belong? Which agency does the regulation of digital assets rightfully belong with, the SEC or CFTC? And what would you like to see them do or not do in the space?
Sure, it's a great question. You know, in my position, and I interviewed and in interviews, I've said this consistently now for a couple of years, and with Chairman Gensler today, where he was before the committee, my position has been pretty consistent. We need certainty in the space, right? So my feeling is somebody's got to grab the ball here. What's not okay is that we continue to go down this path of total uncertainty, and you know. We've not seen any rulemaking out of the SEC really to address these issues regarding crypto. And so there's a total lack of certainty in the space right now. The CFTC, which has experience in this space, as you know, as well, there's kind of just uncertain, there's great uncertainty between who's got the ball here. What I believe from the first and foremost, we got to define what a stable coin is. I have legislation that I unveiled last Congress. I've been working with Chairman Waters and Chairman McHenry over the last year plus to try to figure out what a framework should look like in this space. Who actually is in charge of what from a regulatory perspective? And then, of course, what's the definition of a qualified stablecoin? Is it backed? And I believe it should be backed one-to-one by U.S. currencies or equivalent so that people know what's going on. I think consumers need to know. We need more protections for consumers here, as we saw just recently with FTX. So, you know, my general view is someone's got to actually draft some rules. We need to legislate in this space and give clear direction of who should be in charge. My bill said the OCC and Treasury should take a role. Frankly, I'm agnostic as long as somebody does, but it shouldn't just be through enforcement. We need to actually give direction.
Very good, very good. Let me pivot, given the short time we have, to a topic that I think is very dear to all the folks who are listening into this, and that's the general SEC, Gary Gensler's regulatory agenda. Let me focus first quickly on process. Some of the remarks you made at the oversight hearing around short comment periods. Thought in particular, two great points you raised. One, on the collective impact of these proposals, not just looking at them in isolation. And secondly, the disparate impact that they may have on small businesses. Just pick up on those themes that you spoke about at the hearing.
I'm glad you pick up on that, which obviously is something that I'm very concerned about. You know, when you flood the zone and rush rulemakings, which in a lot of spaces for certain sectors, they've been particularly focused on the SEC, and you've got overlapping proposed regulations with comment periods happening at the same time with shorter fuses than normal, right? Meaning the comment period is briefer, much briefer than normal in history, including under Democrat and Republican administrations. The concern is, well, you want to make sure you're not having unintended consequences in any sector, especially given the tenuous nature of the economy right now and where we are. You've got to be very careful, in my opinion, with what you do, and especially if you're a business, a smaller business that doesn't have 100 regulatory lawyers in the back room to be able to respond to all this and study it, economists and whatnot. You really don't have a chance to give the proper feedback. And for the SEC, you'd hope to take in that feedback and to see how it could affect families, small businesses, sectors of economy, the broader economy, right? You really want to be closely attuned to that. And I'm just trying to, all I said was, like, there could be plenty of great ideas, right? You could have plenty of great ideas out there, but do you really want to, but do you want to make sure, you really want to make sure you understand the impact by them all coming out at the same time. And right now, there's not really a proper time for feedback.
Yeah, look, I think many of us are in violent agreement with that. So appreciate you making that point at the hearing. Substantively, these equity markets, listed options, ETFs, many of us are struggling with what the problem is that the SEC is trying to resolve. And I know that you and Representative Huizenga submitted a letter to Chairman Gensler back in December. It's 4 months past that time. You had asked at the time for more of a fact-based and data-driven approach. Do you feel that the SEC is supporting their market structure proposals in such a way with a fact-based, data-driven approach? And are you convinced that retail investors are going to be better served if these proposals get adopted as final rules?
I think it's the same thing. I think you need more time, right? I think you want to make sure you get more input. I'm concerned. And again, in the end, we may see a lot of feedback that shows what's proposed makes sense, right? And again, I want to be clear, like on some of these things, I'm not saying what they proposed is right or wrong. What I am saying is it's very important to understand the impact these proposals will have on the economy, on small businesses, right? And our leadership in the world, right? We are in a pole position globally, the envy of the world when it comes to our markets, right? Thanks to a lot of your members, right? And what you all do. And you don't want to ever put that at risk, especially in a moment where we have so many factors like higher interest, right? You've got interest rates have moved up, right? You're coming out of a period of intense QE. Well, we've got the situation, the degree of situation in Ukraine. You've got China coming on strong. You really want to understand when you're at this moment how you be very careful, because the unintended consequences of being hasty, of rushing without getting proper feedback from so many experts that we have out there and the benefit of, that's what I worry about, right? What's the impact going to be on families? What's going to be on their savings, on 401ks, on pensions, right? But the space is a very, very important space for our economy and our leadership in the world. You don't want to blow it because, right, someone's trying to score a political point. That's what I worry about.
Okay. Well, listen,
I probably have time for like one more question here. So
just very briefly, I mean, given what you're saying, that many of our members have tried to provide feedback to the SEC during their comment period just ended. As we pivot now, and many of us are looking ahead to the next 18 months of a Gary Gensler-led administration, what more should we be doing? What do you think would be additive to the process? We've all submitted our comments. We've got substantive issues. How do we go about trying to move the needle on some of this?
Listen, I think you should engage with members like me on the committee. I think it's very important. I'm so proud to represent so many of you in Northern New Jersey, and so many businesses that are key to our economy in Northern New Jersey. So for me, and I co-chair a group called the Problem Solvers Caucus with 32 Democrats and 32 Republicans. That's where I left in the middle of a negotiation on right now, so I apologize, on debt ceiling work. What we're about is like trying to figure out, find common ground, put the country first, what's best overall. So engage with members of the problem solvers, with people like me on the committee that really want to I'm trying to take the politics out and put what's better for the country and our economy and jobs and people in our country, and stop playing games on some of this stuff that's just red meat politics for some other folks, but actually just what's good for our future and making sure our economy is vibrant. Getting your feedback is really, really important. And listen, we're all trying to push and give our feedback to the SEC. I ask a lot of questions. I do so in letters. I do so in calls, obviously before the committee. And I was happy that Mr. Gensler, the Chairman Gensler, came. It's been a while since he was before our committee. So those all parts of the process. And I based my questions today on a lot of feedback I got from you. Right. I mean, so that's how this works, right? I get a lot of feedback and then I say, wait, I'm hearing consistently A, B, or C. Right. And so that's all I'm saying is just the more feedback you give, the more you engage, the more your members engage, the more it helps people like me say, hey, the people who are helping drive the economy, because right, that's not the government's job, that's the private sector's job. The people who are helping drive the economy, right, in our great economy and the greatest country in the world, they're telling us, if we do this, what you're not thinking about of the unintended consequences, this, and this. That's very important, because sometimes, on its surface, something seems great. But actually, when you dig in, you realize, oh man, this is really going to hurt these sectors and affect our broader economy and lead to more job loss, right? And more problems. And that's what we want to avoid at all costs. And what I've been focused on, whether, by the way, that's in fintech or other spaces or other sectors, right? To me, it's really, really important. We have strong, healthy markets in to drive our strong, healthy economy and to make sure that we continue to grow in the future. So that's how I think about these issues. And there's plenty of us on both sides who are interested. Jim, I'm sorry for going over my allotted time.
That's a great message.
You can go over your allotted time, and
Sorry.
I thank you. Listen, that was very substantive. We're all from the East Coast, so we all talk very fast. You got a lot in there. And I'm, looking forward to the Rangers, kicking butt on the Devils tonight in hockey.
You must be confused, obviously, about that. The Devils are going to have to school you, but that's okay.
That's okay.
By the way, I'm happy to put a beer on the line if you want on that one.
Oh, that sounds good. Well,
Game on, man.
We're all winners. All right. Thank you so much for your time.
I'll see you.
Thank you.